Alright guys, so in this video I am going to teach you a simple gold scalping trading strategy. It doesn't matter if you are a beginner or an advanced trader. This strategy is for everyone. So if you've been looking for strategies all around YouTube and you haven't found the one that actually works consistently, then this video is for you. Because the thing is, there are a lot of strategies on YouTube, and yes, they might work for a week or even like 2 weeks, but when it comes to like long-term consistency, nothing works. But this is so simple, and we're going to be scalping on the 5-minute time frame. All right, so here are the rules. Here's the entire strategy. All right, so first thing first, we want to start off on the 1 hour time frame. Now if you want a consistently profitable strategy, you have to look at the higher time frame, which is the 1 hour. And then of course our entries will be on the 5-minute. No, we are not going to be trading on the 1 minute for this, although I do have a 1 minute strategy for gold. You can watch my YouTube, but this is going to be enough for you. All right, so first thing first, we need to mark out key levels on the 1 hour. So for me, key levels are basically highs and lows on the 1 hour time frame and fair value gaps. So any fair value gap, right, it is a key level. Now we can only take trades, 3 trades per day. So one is going to be during Asia, one is going to be during London session, and your last trade, it could be during New York. You do not want to overtrade. You have to stay away from overtrading. So that's why we go with one trade with Asia, one trade in London, and one trade in New York. All right. But if you win your first trade during Asia, then don't trade for the rest of the day. You have made your money, and then just quit. All right. You don't have to do it. So let's suppose that price basically comes down and taps into this 1 hour fair value gap, right? Now the next step is very simple. All you're doing is basically going down to the 5-minute time frame. Now from here onwards, from this dealing range high to this dealing range low, you are identifying fair value gaps. Okay, so 5-minute fair value gaps inside this dealing range. Now there could be only one fair value gap here, so let me just give this a different colors for your understanding. So let's call this let's make it dark blue. All right, so this is a 5-minute fair value gap, and we have the dealing range high, the dealing range low. We are inside a 1 hour fair value gap. Now the next step is basically you are waiting for price to inverse above this 5-minute fair value gap. Okay, now let's say that there were multiple fair value gaps. Let me make this fair value gap a bit small. So let's say there were 2 or 3 fair value gaps within this dealing range. Again, from this high to this low. You have to wait for both of them to get inverse. So let's say we inverse this. You're not going to take a long entry from here. You have to wait for price to inverse both of these fair value gaps. Now, your entry is going to be here. Your stop loss is going to go, oh my God, this is way too far down. Your stop loss is going to go below the bodies of the candle. So we're not going to put our stop loss below the low, but instead we want to keep it below the bodies so we have a smaller stop loss. All right. And then we can go for 1 to 1.5 or 1 to 2 risk to reward ratio. And there are some rules that you have to follow. So this is the closest liquidity level after your entry. So we took our entry here. So look to the left and see if there's any high or low. So in this case, we have this 5-minute high. Now that is going to be basically your break-even zone. And what I mean by this is as soon as price hits this level, it doesn't matter how far it is, because let's say that this high was basically around here. I don't give a shit, all right? I don't care. You have to go break even because this is the part of the strategy. We are scalping on the 5-minute time frame, and especially gold. So just follow this risk management strategy. I promise you that's how you're going to see consistency. No, you cannot go break even at 1-to-1. You have to follow this exact pattern and exact strategy, risk management strategy. So let's say we have a high over here, closest liquidity level, right? That is your entry. So maybe price consolidates here a bit, then goes back up, you go break even. All right, and now you can either take one partial at 1-to-1, so close around 30% of your position here, right? And then hold your trade until 1 to 2 risk to reward, or 1 hour equal highs, or buy side liquidity. So as you can see, You can easily hit 1 to 2 risk reward with this strategy because we are coming off of like 1 hour fair value gap. We are using a dynamic confirmation entry model with proper risk management. So if you want to succeed in trading, your first goal should be to protect your capital rather than making capital. That makes sense. All right. So there is one more rule that I have to tell you about. So let's say that price is here, right? And the candle, the 5-minute candle has still not closed right now. So, and let's assume that price takes out the break-even zone before your entry. Well, in that case, unfortunately, the setup becomes invalid because then price can basically just reverse. This could just be a liquidity sweep, and that is why we go break even. We are trading on such a small time frame that this risk management strategy that I'm teaching you right now is crucial. All right, now this is very simple, guys. 1 hour fair value gap, 5-minute inversion, and once you get that, take a long position. And similarly, if I invert the chart, it will pretty much look the same. You have a bearish fair value gap, price taps into the 1 hour bearish fair value gap, we get 5-minute inversion, right? And pretty much that's it. I'm going to give you guys some examples, and that's going to clarify each and everything. Now, of course, let's say that let's just remove this. All right, let's just get rid of this. Let's say price sweeps out this 1 hour high that we have. Okay, so this was a 1 hour. It can be any high or low on the 1 hour. It doesn't have to be like a significant high or low. So over here, this is what we have. Now, the next step, just drop down to 5-minute time frame and then look for a fair value gap within the dealing range. So let's say there is one fair value gap over here on the 5-minute time frame from this dealing range low to this dealing range high. Simply just wait for price to inverse below it, right? Wait for a closure below it, take your entry and go for 1 to 2. Go break even at the closest liquidity level, and that's pretty much it. So now I'm going to give you guys some examples, and yeah, if you're interested, I trade this exact, I send signals in the Discord, in my private Discord with this exact, using this exact same strategy. So if you're interested, click the link down below. But it's not necessary. This strategy is going to be enough for you, and if you learn this, you don't need it. So let's move on to the examples now. All right, guys, so here is example number 1. So in this case, you can see that we have this 1 hour fair value gap, right? So now we want to go drop down to the 5-minute time frame, and we will wait for price to tap into this fair value gap and get ourselves a nice inversion setup. Now we have this one fair value gap within this dealing range, from this dealing range high to this dealing range low, and we're waiting for price to inverse above it. But you can see price couldn't inverse above it, couldn't close above it. We get one more sweep, right? And we are still inside that fair value gap. If I go here, you can see that we have rejected. So this is a rejection. The body didn't close below it, so this fair value gap is still valid. Now going on to the 5-minute time frame, you can clearly see that we formed a inversion setup right here. So you can see we had two fair value gaps within this dealing range. So we have one over here and one over here. Now, as soon as price closes above it, that is going to be your long entry. Your stop's going to go below the bodies, not the wick. That is going to be your break-even zone because that is the closest liquidity pool. And basically, you can go for 1 to 1.5. And let's see how this plays out. So you go break-even here, and eventually price just keeps pushing up. You could have gotten like 1 to 2 or even like 1 to 3 in this case. Because again, guys, we are coming from a 1 hour fair value gap. We are using a dynamic entry model that guarantees a solid win rate, especially considering the break-even rule, which is going to save you a lot of times. And trading is basically like 50-50, but all you need in these markets to succeed is small edge. If you have that, you're going to succeed. Don't listen to these gurus who tell you that you can make like $1 million like overnight. Please, just stay realistic. Okay, and that's how you're gonna make money in this business. Trading is like probably the hardest way to make easy money, if that makes sense. So now that we're done with example 1, let's move on to example number 2. All right, guys, so here is example 2, and you can see that we have this hourly high over here, and you can basically identify the direction of the market. So for example, on the 1 hour, we have inversed this, right? So you can basically have like a, it's not necessary, but you can have a bias that price will push up. But that we're not using this for strategy, all right? All we need is a sweep of high or low, or we tap into some form of fair value gap. Now we have this high over here, so we are waiting for price to sweep above it, and that's what we get right here. Now I simply drop down to 5-minute time frame and I'm looking for an inversion setup. And if you look here closely from this dealing range low to this dealing range high, we have this tiny fair value gap over here. So now we're waiting for price to inverse below it. And bam, right there, this would have been your entry. Stop, in this case, would have gone above this candle high because this would have been very small, right? Oh my God, what just happened? But let's just put it here. Let's just go for 1 to 2 risk to reward, clean like that. And bam. Now, if you had your stop loss above the bodies, it wouldn't really matter. But sometimes it's nice to be logical and not like trade like a robot, if that makes sense. But you can see how price just dipped into this fair value gap. So remember one thing, guys, price takes out highs and lows and then rebalances itself into fair value gaps. So it has to balance out the fair value gaps. So in simple theory, right, price takes out highs and goes into fair value gap, and from fair value gap, it goes out to take out highs and lows. So from this information, you can frame your buys, your draw on liquidity, and always know that good draw on liquidity sometimes this fair value gap because this candle, so this is like the last candle at the fair value gap. So if I go on to the 1-minute time frame here, sometimes it is a good draw on liquidity because over here you can see we have this low. Okay, now this is like secret sauce, but enjoy. So now that we are done with example number 2, and this was basically during New York, and you're gonna get the cleanest price action during New York. Make sure you're not trading before high impact news, always after high impact news. So let's move on to the last example now. All right, everybody, so here is the final example. So over here you can see that we have 1 hour fair value gap. So that is going to be our key level. Now if I go on to the 5-minute time frame, we are waiting for price to dip into it. And right there we have price inside the fair value gap. Now look, so from this dealing range high to this dealing range low, we don't have any fair value gaps inside it. So we're gonna refer back to the old dealing range. So this is the old dealing range, right? So mark out the fair value gap. So you can see we have 1 over here and we also have 1 over here. So we want to wait for price to inverse both of them. And right there we have inversion above them. Now this is going to be your long entry. Stop's going to go below the bodies, not the wick. Remember that. You're going to go for 1 to 2 or 1 to 2, 1.5. And pretty much this is going to be your break-even zone. So let's see how this plays out. Bam, right there. Easy peasy, guys. So thank you so much for watching. I'll see you guys in the next one. Take care. Goodbye.